joining us soon. And my dear managing committee members, CA Salim, CA Anand, CA Suresh. Yes, I think Suhail sir also joined us. Yeah. And other senior members and friends, today we have a virtual seminar after many physical seminars this month. We are going for a virtual seminar today. I'm sure you all are maybe busy with filing of belated return, but you are finding out some time for joining us on for this RERA, especially a very interesting subject, a new subject, RERA, this afternoon. We had very fruitful bank audit seminars, and I think members are waiting for engagement letter or call from the banks. And many of our members I called, I spoke to them, but unfortunately the appointment letters have not yet received by many members. And for me, it was a cooling period for last 2 years, and this year also I think there is no contact from any bank, so there may be a cooling for this year also. So this looks a very challenging time for all of us in even in bank audit, and also certain news were coming last week, like Parliamentary Standing Committee on Finance recommends, amendment bill on CA Act, not only CA Act for CS as well as Cost Accountants Act. They are recommend some amendment, and we were hearing about Indian Institute of Accounting, something in the they are in the pipeline. But I would like to. I had interaction with our few Central Council members also. We need not worry on this. There is no any this bill does not contain any provision to end our institute's monopoly, but actually it's a proposal. So to set up an Indian Institute of Accounting, it is only a proposal. It is not anything to become as a provision. So it will take a lot of time, and even our institute also on talk with the committee and panel has urged the government to consider their suggestion. So we need not worry about. There are many the same way of accounting bodies in UK, USA, and Canada. On the same way, the government is thinking, the parliamentary committee, standing committee is thinking of having a competitive atmosphere in our profession. So we need not worry about anything about IIA, the Indian Institute of Accounting. We are not, we need not worry. There won't be any what is called our right will be lifted. There is nothing like that. And but for a future of a chartered accountant, we must think. We must think of going from the normal or traditional auditing or audit work. There are many opportunities are coming up. There are many new avenues are coming up. For example, forensic audit and insolvency, bankruptcy code, many revival plans, valuation, and also the RERA. RERA is also one of the new avenues which we got a opportunity to deal with. So today we are having a very interesting session on RERA. We have CA Vinay Tyagarajan. He will be talking to us on the role of chartered accountants. We must know how we can, capitalize this opportunity through RERA. Not only for audit of builders or audit of real estate, but even for a client who is coming and asking your opinion on for buying an apartment or buying a land. Even the land also covered under RERA. So buying a land, developing from developers, we must know, the various provisions of RERA to, give them a proper opinion, proper advice. So I think today we will be benefited by these two sessions from these two gentlemen. I wholeheartedly welcome CA Vinay Tyagiraj from Bangalore to this virtual seminar. And I also welcome Advocate Suhail Ahmed. He is also joining from Bangalore. Welcome to Ernakulam. Both of you, welcome to God's own country and Queen of Arabian Sea on a virtual mode. And I welcome all my managing committee members, Salim, Suresh, Anand, and all others who will be joining soon. And I welcome all the participants, my senior professional colleagues and friends to this afternoon virtual session. And there is one more thing. After this session, there will be Taxo.online. They will be joining us after this session, after 5 o'clock. And they are giving to all the participants in this seminar an e-book on GST. So we can hear them also after 5 o'clock. So I hope we will have a wonderful learning time. Thank you very much for joining, and wish you all a happy learning time. Thank you very much. Over to Salim.
Thank you so much, sir. Today's first session is handled by our own member, CA Vinay Tyagarajan. Mr. Vinay Tyagarajan is a fellow member of the Institute of Chartered Accountants of India with academic qualification in Bachelor's of Commerce, followed by LLB, Senior Principal Financial Consultant for RERA Consultant LLP. He is the founder partner of Venu and Vinay, Chartered Accounts firm, having 20 years experience in taxation and business consulting. He has presented seminars at various forums on investments, taxations, GST, RERA. He started his practice on RERA since 2016 and gained practical experience over a period of 5 years. Conducted more than 170 workshops, webinars across South India to various members of associations, CREDAI, Kerala, and other chapters. Naradako, TBF, Pradai, CA Institute, CS Institute, Architects Associations of India, Institute of Engineers, Home Buyers Association, and many more. He is also one among the guest speakers at the CA Institute and various management colleges. He has presented himself at regular panelist of discussion at Kannada News Channel, TV9, Raj Suvarna TV, etc., who also have published articles on financials, RERA topics in All India Radio, Kannada Prabha, Indian Express. With these words, I would like to invite Vinay sir to present today's session. Over to you, sir.
Yeah, Salim sir, you can introduce Advocate Suhail also. He is also there. Both of them will be, yes. Please.
And also with our Vinay Chartered Account, we have one eminent speaker. He is Mr. Suhail Ahmed, who is one of the top advocates in practice and senior principal legal consultant of RERA Consultant LLP. He is the founder partner of the law firm Trail-Based Advocate based in Bengaluru. He is member of Rotary Raj Mahal Vilas, Bangalore, and Rotarian for 12 years, who is practicing in the field of property laws, corporate laws, and other civil laws, having more than 20 years experience in the field of property laws, and former chairman of the legal committee and the chairman of the legal committee and member of the core committee of National Real Estate Development Council in Karnataka, convener of the legal committee Naradako Karnataka, member of anti-ragging committee and committee for stem cell research at Jawaharlal Nehru Center for Advanced Scientific Research, Bengaluru. He has contributed to the spread of awareness of the Real Estate Regulation and Development Act 2016 across the southern state of India like Karnataka, Telangana, Andhra Pradesh, Kerala, and Tamil Nadu, and has conducted workshop for Telangana RERA Authority, CA Institute, CS Institute, CREDAI, Mysore CREDAI, Kerala, and other chapters, Brand Capital, Times of India, HDF Telangana Builders of Federation, Hyderabad. Served as a member of various technical committee of ICAI. Presently part of governing council for Naradako Karnataka chapter. Welcome you, sir, for this session.
Thank you so much. Thank you so much.
Over to you, our first speaker.
I thank ICAI Ernakulam for giving us this opportunity. Thank you, Mr. Jose and Salim, for introducing us. Now, though I think you've scheduled me and myself and Mr. Vinay to have separate sessions, but if everybody doesn't mind, we generally talk together because he talks on the finance and I talk on the legal aspects. So if it's all right, we'll conduct the entire session together.
No problem. That will be very
No problem.
interesting.
More
That will
interesting
be,
also, and you will get both the legal as well as the financial inputs. Over to you, Vinay.
that will be very nice, sir. That will
Yeah.
be very nice.
Thank you so much.
Thank you. Thank you.
Very good evening to one and all. Sir, hope my screen, you can see the screen.
Yes, sir. Yes, sir.
Okay, so we are in the virtual mode, and if anything which is not audible, not visible, you have to ping to us, sir, because we'll not be knowing, we'll be looking at the screen and we'll be talking. It's always a difficult proposition to know whether members are there, not there, whether they're listening, not listening. That's always a challenge, sir. Yes, sir. Okay, thanks to Ernakulam branch of SIRC of ICAI for giving this opportunity to share some of my knowledge and experience on this RERA in the past 6 years. When I say 6 years, even though the act started in 2017, me and Suhail started looking at this act and the rules and how the government is taking steps since 2016. Actually, we are part of the organization. That organization started in 2016. That way, it's about 6 years we are practicing in this RERA. And we traveled in across Kerala extensively. In most of the districts of Kerala, we have presented our topic on RERA, either to the CA Institute or to the CREDAI chapters, and also to various group of builders. So this way we are very much attached to the Kerala also, but due to COVID, our travel has been a challenge and also it restricted. Maybe soon we'll be reaching physically to the branches to share our physical sessions also. And as Jose sir told, it's a very interesting subject and also a industry. We are all most attached to it. We are more deal on day-to-day life, day-to-day profession. We may not be practicing on this real estate. However, there may not be a life without this real estate itself. I was speaking to one of the senior member. He always says that only the real estate has a name called real. Even the gold doesn't have a name called real. Okay, so to that extent, this is something which is a real and which always gives everybody the excitement and also some curiosity to know about this topic or a subject. Not only on the RERA, on the real estate itself. We all, it's more as the reason maybe this is a more a speculative, the more attached to the human being, the most assured investments, the most always looking at anticipating to invest more and more on this industry. As people are more attached to it, they end up with spending more money towards this to buy a piece of land or piece of building or something. Government is thought fit to have some regulator, even though this is the second largest contributor to the GDP, second largest employment creator, second largest tax collection. Maybe you can say first largest tax collection itself in the industry in the entire process. But unfortunate, over 7 decades, we did not had a regulator to regulate this business or industry. Of course, when we say that there is no regulator, there are various advantages and also disadvantages. Maybe this industry has so flourished because of no regulator. That may be the one way to look at also. Another way also, because there are no regulators, there are more chances for the investors to lose their money. So also the importance of this regulator or this act itself says the various objectives Maybe in the next slide, I will share the objective before we go further. And as Joe sir mentioned, he said 2 hours of session. We'll try to give a justice to our presentation, and we promise that whoever participating will not be upset, will not be sad that they're spending 2 hours in the year end, or maybe during the month of March, they could have choose to stay with the family or choose to stay at the office to complete their year end activities. Please, it's our promise, it's my and Suhail promise that we deliver and the participant take a value out of their participation, sir. So in today's session, we'll touch about latest updates on RERA and especially what's happening in Kerala relating to the RERA. And as a chartered accountant, what is my role, where all I can play a role, and also let me explain the opportunities under RERA to the chartered accountants. Change in the real estate business practices post-RERA. We all know that when the regulator comes into the picture, certainly there is a change in terms of our business, the practices, the procedure, the process, which results in impact on the industry, impact on the way that one carries on the business. We look into the aspects of what are the changes that has took place after RERA. So this is about today's session. And as I said, any act has its objectives. Any act has some of the preamble. Similarly, this act also have it. And on the screen, what we have is the objectives of RERA. And I invite each of the participant, each of the member here, keep this as a background. This is the objectives of RERA. Whatever we try to share during today's session, today's presentation, everything works within this ambit of objectives. And there is no section or no provisions in the act left touching any of these objectives of RERA. To that extent, this act is curated, the act is taken care of it in terms of its provisions of the act. Suhail, over to you to share about these objectives.
If we go back and see that the real estate industry, certainly there has been some amount of mischief in the industry in terms of the practices, in terms of the mode in which the promoters would promote a project, what they would promise and what ultimately would get delivered. So in a way, to address all that mischief that existed in the industry or still exists in the industry, the real estate bill was taken up, and then finally the act came to be enacted in 2016, where some of the sections were enacted, and then subsequently in 2017 the entire act was enacted. So as we can see, the objectives of RERA: accountability towards allottees and protection of their interests. So the primary importance that RERA gives to is the protection of the consumer, or in this case, the allottees in the project. So when we say allottees are referred to, the definition of allottees under the act means somebody who has agreed to buy, who has purchased, and who has subsequently also acquired the right in that property. So the definition, the connotation or the definition of allottee includes everybody in a real estate project. The real estate project that we refer to at every point of time during this session is a registered real estate project. So over the period of 4 or 5 years, we've had many high courts, in fact even the Supreme Court, many decisions have been rendered. So the act applies to such projects which are registered under the provisions of the act. So accountability towards, when we say accountability towards allottees, it means that what the promoter says, does that get delivered? Does it get delivered within the time that is stipulated? So in order to protect all of this, there are provisions within the act which also go into as minute as the model apartment that is shown to you. That becomes part as a veracity of advertisement. Whether that model apartment that is shown to you is exactly what is being delivered, or what was shown to you as something else and what is being delivered to you as something else. So in order to make sure that the promoter is accountable towards the allotee in terms of, so this is one of the primary objectives of the act is accountability. Infuse transparency, ensure fair play, and reduce frauds and delays. So in terms of transparency, we know for a fact that earlier what was being sold was super built up area. So the super built up area does not have a scientific definition in any neither in any book or neither in any engineering standards or any other standards. So there was no transparency at all. In a project, a promoter could have loaded 20%, could have loaded 35% to the carpet area to make it a super built up area. So there was no standard, and at no point of time was there a disclosure to say what was the super built up area that was being loaded onto the carpet area while collecting money. So now that goes away. In terms of transparency, we know for a fact that every promoter has to now disclose the carpet area that is being sold in case of an apartment. So ensure fair play is, we know for a fact that there was no level playing field. There could have been one promoter who was violating everything and constructing something, and another promoter who is trying to adhere to the law, adhere to the building bylaws, but is not able to realize so much money because that right next door somebody is violating everything, constructing 2 additional floors and trying to make money out of it, and while selling at a lower price, while somebody who's adhering to law is not able to do that. So when all projects get registered, everybody complies with the requirements of the act, constructs as per the bylaws. So it ensures that there is a fair play amongst the promoters also. So it also, and when we set the start date and an end date, and we know that the details of all the entire details of the promoters are to be uploaded while filing an application. So there is so much disclosure that goes into while registering a project that there is a less chance of a fraud being committed now compared to earlier. So next is introduce professionalism and pan-India standardization. Professionalism in a way that the promoters now cannot simply enter into an agreement, put up a board and start selling. They have to do so much more to be in the industry, and we also know that financial management requires a promoter to be much more organized than it used to be before, and they are very much answerable. In terms of standardization, we know for a fact that along with the rules, the agreement of a sale is notified. Everybody has to follow that same thing, so that becomes standardized. In fact, now the Honorable Apex Court, the Supreme Court, is insisting that the sale agreements for all the states should be uniform. So we may have a day when we may have a single sale agreement in case of a real estate project. It may be the same pan India. So which means that everybody, there is no surprise, there is nothing hidden, there is no fine print. So all that goes away, and there are no clauses which are loaded against the allottees or in favor of too much in favor of the promoters. So all this is going to go away. There will have a lot of standardization. Symmetry of information between the promoter and allottee. There are a lot of course, the registration itself, the details that are given at the time of registration are available open to public. So which means that the public has access even before deciding to buy a project. An allottee can go. So we know for a fact that in Kerala we have a lot of NRIs and people living abroad. So they can sit anywhere they are and look at a project, assess the details, see who's the promoter. So you can also see what is the past performance if they have already done some projects earlier. So all this assessment can happen sitting in the comfort of your home, wherever you are in the world. So, and also the act mandates that certain information has to be provided. If that has not happened, then the allottee, that is the consumer, gets a right to go against the promoter. So imposing responsibilities on both promoter and allottees. There are many responsibilities that are cast on the promoter in terms of what are the details to be done, to be given to the allottees, what are the do's and don'ts in terms of formation of association, and similarly on the part of the allottees to also be entitled to certain rights and also certain obligations in terms of payment of money as per the terms of the agreement, and come and participate in formation of the association. So all of this is there, so that while now the promoters are also required to do certain things, the allottees are also to adhere to the terms of the contract that they entered into or whatever obligations that are cast on them, make sure that they perform those. Because many times it happens that allottees do purchase into a project, but they don't pay money. And certain times, even after the project is completed, they don't come and take possession. So which casts a lot of financial burden on the promoter. So in such cases, now the promoter can also go against the allottees. Establish regulatory oversight mechanism to enforce contracts. So now we know for a fact that in case of a real estate project that is registered under the Act, the dispute resolution mechanism is inbuilt in the mechanism, because we have a regulator now, and we have an adjudicating officer, we have a real estate appellate tribunal, and the second appeal lies with the High Court. So there is a well-established regulatory oversight mechanism in terms of both administration, that is in registration of projects, and also in any dispute that arises out of any in respect of any real estate project. Fast track dispute resolution, that is though time is stipulated, it's quite fast, and the proceedings are all summary in nature, very short, and of course the only issue now currently with the Act is the execution of the orders that are passed by the authority in terms of either compensation or interest that is granted. That is not just a problem for Kerala, but all the entire India, because the way the Act is the legislature has said that recovery of money should be through the revenue mechanism, which is quite difficult, as we all know, in any given state. So maybe perhaps we may have certain amendments to bring it on par with the Consumer Protection Act, where the authority itself is given the right to enforce its orders. So once that is done, I think this will also fall in place. So promote good governance in this sector, which in turn would create investor confidence. We know, though it's one of the largest in terms of a sector, it is one of the largest, but it still hasn't. It's one of the one sector which anybody looks at suspiciously, and everybody, in fact, the promoters, we know, they think that everybody looks at them suspiciously. So over a period of time, it'll achieve the standard that any other industry would gain in terms of confidence, which will also bring in more investors, and also the industry will become more structured and more robust in terms of what is promised and what is to be delivered. Yes, Vinay, any other inputs?
Yeah. Thank you, Suhail.
Yeah.
Let me summarize about this. This is the objective of RERA. Look at this background. Let us keep it in the mind. It promotes the accountability, promote the responsibility amongst the promoters and the allottees. There is a transparency which intend to bring under this through Act. There is a standardization. At this point of time, there is no entry and requirement for somebody to start this business. And also we know that there's a speedy dispute resolution under this Act, because we have adjudicating mechanism and also a tribunal. And finally, there is a professionalism across the industry. So look at these aspects, and which is inbuilt in every provisions of RERA. And going forward, we'll explain each of these in our slides also. As I mentioned, that one of the topic further today is about latest updates on RERA, what's happening, and that too especially in the state of Kerala. So initially few about 4-5 slides which I'll share about the importance of it. And most of, if you are practicing on RERA on a frequent basis, and if you are issuing the certificate under RERA, you would be fairly aware of what's happening. Otherwise, you will be in a dark that without knowing, we end up with issuing some of the certifications. Friends, you all know that Form 5, which is notified by Kerala RERA through its regulations, is the annual audit under RERA. Audit of accounts under RERA is for which we have to issue the Form 5. And as per the Kerala rules, the due date for submission of this Form 5, that is the annual audit of accounts under RERA, originally 31st October 2021 for the financial year 2021. Due to COVID and other requirements, the authority has extended the due date to 31st December 2021. And recently, in the about 3-4 days back on 24th March, again there is a report which is generated by the authority which they felt the number of RERA audit report which are submitted by the promoters of the various registered projects are too minimal, very small. Okay, it did not had minimum number of audits also which are submitted. So it's instead of authority going back and issuing a show cause notice for why the penalty should not be imposed, they given one more final opportunity for all the promoters of the real estate project to file the annual audit report of 2021 by March 22. So it's like the due date is left for another 2 days. So if any of your client or any of your known promoters who are not filed the annual audit report under RERA, that is in Form 5, you can insist them to file by next 2 days. The reason is under this being the provision under section 4, and if it is not complied with, section 60 is applicable. Section 60 talks about penalty can be levied by the authority up to 5%, up to 5% of the project cost. Remember, my dear friends, under RERA, every penalty is related to the percentage of cost of the project. It is not 100 rupees, 200 or 5,000 rupees, or maybe 100 rupees per day of delay. No, under RERA, the penalties are linked. Penalties are linked to estimated cost of the project, percentage of estimated cost of the project. As this is the extract of the notification dated 24/3/2022, authority has made it clear if it is not filed within 31st March 2022, the name would be published in the website and also penalty would be imposed in accordance with section 61 of the act, and which is huge. Okay, up to 5% they can levy. Forget about 5%. If they levy 0.5% also, it's a huge money in terms of the penalty. Please inform your clients or promoters who are dealing and who are registered with RERA and ask them to submit this document in next 2 days. Next, in the month of February, one more notification, public notice they have given in terms of the document, which is basically a joint development agreement. Friends, you all know that in the state of Kerala, joint development agreement was not registered with the sub-registrar for whatever be the reasons. Now the authority has made it clear for them to grant the registration. The requirement of registered JDA in case of land belongs to others is a mandatory document. Please ensure that this document is part of your RERA application, failing which there would be a chances of non-granting the registration or delay in getting the registration. Suhail, you want to say about JDA mandatory document?
Yes. So I'm not sure how the Stamp Act in Kerala deals with the requirement of the stamp duty that is payable on a joint development. In Karnataka, I think there are very few states. Two of those prominent states that I remember offhand is one is Kerala and another one is Tamil Nadu, where the joint development agreements are not usually duly stamped for the stamp duty as per the Stamp Act. I think Tamil Nadu still has a less stamp duty, but the documents are not registered. So all other states, we know for a fact that Telangana and Andhra Pradesh, they have something called as a DGPA. In Karnataka, we have a JDA and GPA. So when we started seeing cases in Kerala, we were actually surprised to see that the developments were being done on the basis of unregistered documents. In many cases, we have also seen that on the basis of memorandum of understandings, sale of undivided share of 1%. So there are many things that are being done in Kerala, which is not otherwise, which we don't see otherwise in any other state, because real estate as an industry has kind of matured in other places. I'm not saying that in Kerala it has not matured, but the practices that are being adopted could be one to avoid stamp duty, or could be for the ease of doing things, and also when it comes to enforceability between the landowner and the promoter, it may become very difficult if it's an unregistered document. So if the authority initially, yes, did permit unregistered documents, but I think now for all new projects, the authority wants to insist on the document being registered. One, to make sure that the rights and obligations intersect between the landowner and the promoter are also well defined and they are able to enforce it against each other, and also the rights of the allottees are protected, because in terms of anything going wrong, the marriage between the landowner and the promoter going wrong, ultimately the allottees should not suffer. So this is a very good move by the authority. And yes, of course, the implication for promoters would be payment of a higher stamp duty, but I think that could be absorbed in terms of the cost of the project itself. Yes, Vinay.
Yeah, friends, I'm sure that most of you are advising the clients for the JDA also, joint development agreement, in terms of drafting, or maybe in terms of implication of a GST or a income tax for the JDA. Okay, and you all know that, we all know that it is a fair settled law under GST and the income tax in terms of the applicability of the taxation, and now it is insisting to be registerable. So that means to say that there is no scope for modification at later point of time, unless it is agreed by both the parties. And also, once it is registered, it's a public document, very difficult to modify without knowing to the bringing notice to the any of the statutory authorities. Please ensure all these things are in place. When you advise to the any of your clients, ensure that the requirement under RERA also to be kept in mind before advising. Next, in terms of extension of the project beyond 1 year, other than under section 6. Friends, we all know that while filing the application for RERA, there is a mandate to mention what is the start date of the project and what is the end date of the project. So when we say start, when do I start the project and when do I stop the project? When do I complete the project? So this is a timeline within which I'll complete the project. Generally, we mention as part of our sale agreement. Now it becomes a public, where promoter, while registering the project, should mention when do I end the project. So, and for various reasons, best known to the promoters, best known to the others, where the promoters or the builders, developers could not complete the project within the stipulated time, then the registration validity is lapsed. When the registration validity is lapsed, under section 6, in case of a force majeure, authority has power to sanction only 1 year extension, 1 year extension of the time. That is what is permitted under the Act under section 6 by giving the reasons of force majeure. And what will happen in case of the project which require more time, which require extension of the valid time beyond 1 year, more than 1 year, then authority may invoke section 8 of the Act, and on case-to-case basis. It is not for every application filed by the promoters. Authority will issue this extension beyond 1 year on a case-to-case basis, looking at the positive side of the project, looking at the benefit the entire allottee gets, or entire stakeholders gets in terms of issuing the registration. And such registration shall be applied minimum 3 months, extension of registration applied minimum 3 months prior to the date of lapse of that 1 year application, by payment of 50% of the fees and by hearing by the authority. And underline is, in case authority extend this beyond 1 year, rights of the allottees are not affected. That means to say, whatever be the agreement which is there, that continues to hold good without losing their rights in case of claiming the delay compensation or otherwise. It's a very welcome move, because without validity of the registration, as a promoter, I was very difficult. I was under stress to sell the project without having a validity, which is very difficult to raise a loan by the individual customers when they go for a banking loan or a housing loan, or it's difficult for the promoter to go for a construction loan when the validity of the registration is not there. So friends, keep it in the mind. Considering the scheme of the project, considering the size of the project, considering the various past experience of the project, we means the professional should advise the promoters to put the end date. You can mention, instead of mentioning 24 months by which they complete the project, expand it to 36 months, expand into 40 months. Even if it is completed before the date, you are happy, client is happy that well ahead he is completed. Consider for whatever be the reason, builder may not able to complete within 24 months, then they have to go under section 6 for 1 year and again under section 8 for beyond 1 year. So all this complication can be avoided if we advise the client on filing the application that please do not put 24 months, you will not complete within 24 months, put 36 months or 40 months, depends on the past experience. That gives a fair idea, fair advantages to the builder without going for section 6 or section 8. So the moment if you go under section 6, there is a cost of registration, extension, professional fees is involved, and there are various other risks which you end up with exposed to it. Similarly, section 8 is again a very dangerous section because it's a discretionary power of the authority to grant the extension beyond 1 year. If they are not in a good mood to extend beyond 1 year, then the promoter is fixed. So when we advise to our clients, please advise for them to take at least 1.5 years extra than what actually they wanted to deliver to the customers. Suhail, you want to add anything, or I can go to the next?
You can continue.
Yeah. This I want you to take it, section 12, 19, 18, 19, in the view of the new tech judgment, where the cases are moved from the complaints cases are moved from the adjudicating officer to the authority.
Okay. So the Real Estate Regulation and Development Act is being a new act. We know that it's going to take a little time in maturing. So there have been certain landmark judgments. Of course, one at the earliest point of time was rendered by the Bombay High Court in Nilkam Realtors. Now, recently in November, the Honorable Supreme Court in a case answered 4 vital questions in a judgment in New Tech Promoters and Developers versus State of UP. This was in the month of November. Subsequent to which, what has happened was that the adjudication mechanism under the Act, there was an adjudicating officer who was a retired district judge was appointed, has been appointed rather by all the authorities. In addition to that, the authority itself, which consists of chairman and members, also would discharge quasi-judicial functions. So what was happening was that the authority earlier before this judgment was hearing only matters which did not relate to any sort of compensation, be it by way of interest, be it by way of penalty, or by way of compensation. In case of an allottee seeking such a relief, were all being heard by the adjudicating officer and were being disposed of by the adjudicating officer, who in all cases was a retired district judge. However, the question, because by virtue of section 72, which is the enabling provision for the adjudicating officer, the section 72 was interpreted by the Honorable Supreme Court, and it was held that the adjudicating officer, his right or what can be adjudicated upon section 71, sorry. So section 71. So what the adjudicating officer could adjudicate is only compensation. The quantum of compensation can be adjudicated by the adjudicating officer. Rest everything should go before the authority, which means that if it is a delay, interest on delay, penalty, or any the other relief that is to be sought should go before the authority, which consists of the chairman and the members. So in view of this judgment, the Kerala, of course, most of the regulatory authorities have adopted this, but Kerala RERA specifically issued a public notice on 22/12/2021 in pursuance of this judgment, wherein it has clarified that in case of a claim for refund, delayed interest and compensation, which can be sought under sections 12, 18 1B and 19 of the Act, they should not be clubbed together. One that these reliefs being distinct, they should be sought separately. Separate complaints should be filed. Claim for refund and interest for delay for the amount paid to the builder due to delay in completion of work should be in Form M. There are Form M and Form N that is notified under the rules. So specifically, the authority has said that it should be in Form M. And claim for compensation, which claim will lie with the adjudicating officer in all these sections. Sections 12, which deals with veracity of advertisement, section 14, which deals with adherence to sanction plans as well as defect liability, section 18 deals with delay compensation, and section 19 deals with the rights and obligations of the allottees. So if there is any complaint for compensation that has to be filed in any of these sections, either by a promoter or by the allottee, it should be in Form M and should be filed before the adjudicating officers. So the authority has gone one step further and said that when the complaint is filed, you should give a detailed calculations with a statement showing the amount due date, rate of interest, etc., which should be annexed with the complaint. And if it is not done so, the complaint will be treated as a defective complaint and it may get rejected. So this, in terms of the adjudicatory mechanism, in many states, this has translated into thousands of cases being transferred from the adjudicating officer to the authority. So effectively, the adjudicating officer has very little work now, because of course, as we go further, maybe the claims for compensation will also increase. But the way the complaints were being filed, they were in a very ad hoc manner, and most of these complaints being online, they were being filed in any manner, in any and every manner. So that may get reduced, and particularly Kerala RERA has already addressed this issue and made it very specific that how things have to be done. So this is the effect of the judgment. Of course, three more other questions that were answered under this judgment. Perhaps I'll ask Mr. Vinay to share this judgment with you. This and some of the other judgments. It's very important if somebody who is practicing in RERA that they should go through these judgments to understand the law, the present law as it stands today. Yes, Vinay. Thank you.
Thank you, Suhail. And also, authority has given one more public notice in the month of November 2021, stating that while filing the application for registration of the project, many of the documents which are submitted or through the professionals, they're finding it very difficult to process the registration, and they have given this notification stating that please provide the proper documents and the information which matches with the building plan or other documents which are submitted. Also, they went ahead and mentioned that in terms of the plan, development permit is a must for the plots proposed to be developed in excess of 8, because there was some clarification which was missing, or on regular basis authority used to get a call stating that is my plots is a small piece of project having whatever the number of the plots was required to be registered. With this notice, they say that yes, it is to be registered the moment it exceeds 8 numbers and more than 500 square meters. And I'll like to touch upon important aspect which is more applicable to the Kerala. Maybe in the subsequent slide, I will tell you why the reason, what was the reason of this. You may be surprised to see applicability of the Act. Why are we discussing today? It's about 5 years back. I'll share the details also. Initially, when the Act was comes to an existence on 1/5/2017, the Act mandates all the projects which is having more than 500 square meters required to be registered, or more than 8 units required to be registered. And the projects which have not received the occupancy certificate or a completion certificate as on 1/5/2017, those projects are all called ongoing projects. Those projects required to be registered with the RERA. This is when, as per the Act. Subsequent to that, the application forms are notified by the Kerala authorities by way of Rule 3.1, Rule 3.2. For the ongoing project something, for the new project something. And subsequently, authority has given some of the notification, because as we all aware that authority, even though Act is in 2017, but authority is appointed, the state government has appointed the authority, and they started functioning from 1/1/2020. That means after lapse of about 2.5 years. When the authority came and the authority started functioning, they had issued couple of notifications stating that all the projects which received the completion certificate as on 1/1/2020, they need not to register with RERA. So they are exempt from registration with RERA for a simple reason that if they come now stating the project is completed, why should I insist them? It is a good intent of the authority to exempt those projects from RERA registration. However, again, with the view of the judgment of New Tech Promoters and Developers Private Limited of the state of UP, one of the provisions, one of the argument before the Honorable Supreme Court insisted and also come out with a judgment stating that irrespective of whatever be the status or any day, as on 1/5/2017, if the project is ongoing, if the project is not received the occupancy or completion certificate, all those projects require a registration under RERA. So with the view of this judgment, with the pronouncement of this judgment, authority felt it right to withdraw the earlier notification they have issued to exempt the projects which are exempt from the RERA registration, which is dated 17/9/2020 or 27/12/2019. So all those notification or public notices are stand withdrawn. So to this effect, now all the projects which is not received the completion certificate as on 1/5/2017 required to be registered with RERA, irrespective of status of project as on today. So friends, please keep it in the mind, the exemption notification of non-registration is taken back, is withdrawn by the authority. To that effect, all the projects which is ongoing as on date of RERA, that is the implementation of RERA 1/5/2017, required to be registered under RERA. So this is about the latest developments, latest notification, latest circular which are issued by the RERA authorities, Kerala RERA authorities in specifically, and few of these are in view of the Supreme Court judgment in case of New Tech Promoters and Developers Private Limited versus State of UP, and many of that with this judgment there is an impact in terms of the registration, impact in terms of adjudication, impact in terms of hearing, impact in terms of filing the complaint, everything, etc. So it's a very good judgment. Of course, there would be some inconvenience to the RERA authorities to start hearing all the complaints filed by the allottees. However, authorities are no choice. They have to increase their hearing or increase the number of members for the purpose of to dispose the complaints filed by the allottees in the project from time to time. So as I said, this is the latest updates under RERA, and today's session also includes the role of a chartered accountant. What is my role as a chartered accountant, and how it how I perform, how I deliver my services is one of the topic, and of which one of the important, one of the must know topic is about financial management under RERA. So here, please explain. I will sum up of this provision also. So one of the important provision under RERA is about the financial management.
Okay, so as we one of the important thing is financial management of a project. One of the documents that are required to be filed while making an application for registration of a real estate project is a Form B affidavit or a declaration, which is not just prevalent in Kerala but most of the other states, which binds the promoter in terms of the act, that is section 42 LD of the act, to do certain things in terms of the financial management of a real estate project. The act now prescribes how the money should be collected, how much of the money should be deposited into a designated bank account, how the withdrawals should happen. In fact, it also says that how an agreement should be entered into, how much money can be collected without entering into an agreement, and that the agreement should be registered after collecting certain amount of money, or once the agreement is executed, it should be registered. It should be a registered document. So when it comes to financial management, the promoter, of course, can collect money from the allottees up to 10% of the total sale consideration can be collected as booking advance, either under an allotment letter or by issuing receipts. So any money beyond that is that if it is to be collected, that if it is more than 10% of the total sale price, then it is mandated that the promoter should enter into an agreement for sale and also register the same. So what happens when the money is collected? Out of the collection of 100%, 30% of the money, the promoter can utilize it however the promoter deems fit. The remaining 70% should be deposited in a designated project bank account. And this bank account should be opened in a scheduled bank. So this is what section 42 LD stipulates, that 30% is free to be used and 70% to be deposited in the project bank account. This 70% of the money which is collected from the allottees. So this is only about the allottees money. This is neither about the funding that the promoter brings in or any borrowing of the promoter from any financial institutions. This project bank account is specifically in respect of the money that is collected from the allottees. One other thing is that it should be a no lien account, in the sense that only the promoter should be in control of this bank account. Many times we have seen that the promoters give control of this bank account, create an escrow mechanism in favor of their of the lender, and the lender continues to take money out of this account. In fact, Rajasthan High Court has rendered a judgment in this regard in respect of the designated bank account, that even a lender does not have any control over this, because this is the allottees money. This money cannot be utilized even for repayment of bank loans and all that. There are many precedents, many circulars are issued, many judgments are there in this regard. So when the 70% money is deposited into this bank account, it should be withdrawn based on percentage of completion of the development work in the project. So which means to say that if the money collected is higher than the work done, then so much money, the balance money over and above the percentage of completion of work, should remain in that designated bank account. The whole intention is to make sure that at any point of time, if a promoter is unable to carry forward the project up to the stage at which the development work has been completed, the money could have been withdrawn, and the remaining money which is not spent towards the project should be there in the account to enable the authority to decide to do anything with the project, either freeze the bank account, make over the project to the association of authorities, or whatever happens in an extreme situation where the registration is revoked or the project lapses or the promoter is unable to carry forward the project. So that is the whole intent of this withdrawal based on percentage of completion. And every withdrawal of the money from this designated bank account should be certified by 3 professionals, which is the architect, a chartered accountant, and an engineer. So the architect certifies the percentage of completion, the chartered accountant certifies the money utilized, and the engineer certifies the cost incurred in executing the project. So the forms of these 3, the certificates that are the forms, the formats of these forms are mostly given by the authority itself, and based on this, these professionals issue these certificates. And the other most important thing that has to be kept in mind as financial professionals, as being financial instrument professionals, the 70% of the money that is withdrawn until completion of development work, that is when 100% development work is completed, it should again be flowed back into the project itself. It's not that 70% it can be withdrawn and again spent. There are some cases that as a financial professional you may advise the opposite, saying that 70%, because it's a reimbursement, you have already completed the work and you're withdrawing, you can spend it. That's not how it is. If you read the provision in RERA, it implies that the money that is withdrawn also should be put back into the flowed back into the project so that the development work is completed. Once the work is completed, you report completion, probably then the promoter could be free to use the entire money, including the 70% which is withdrawn. So at the end, surplus left, which is what I just said, that it can be utilized in any manner. Vinay, you want to add something to this?
So as a professionals, as a financial professional, as a chartered accountant, our certificate is the ultimate certificate to withdraw the money from the project designated bank account. Recently, Maharashtra RERA has given a circular or notification directing these certificates should be handed over to the bankers before withdrawal of money from the project designated bank account. Mean to say that a chartered accountant always has a higher, always have a more say in terms of allowing the promoter to withdraw the money from the designated bank account. So this is very important, and this is one of the biggest opportunity the professionals we have in terms of showing our knowledge, showing our strength, showing our comfort, showing our assurance to the industry itself and to the authority that money which is collected and in terms deposited and withdrawn is used only for the purpose of the project. Friends, you all aware many of the projects which are all not completed, maybe which is beyond time schedule, running about 10, 12 years, 15 years. And it was shocking for us to know that Kerala, in the southern India, Kerala is the largest delay in delivery of the projects compared to any other 4 states. That is something which is to be looked at, that because the money which are collected are utilized for the purpose other than for a project development. But fortunately, unfortunately, these people who are invested are outside India, and they may not be much interested to seek and demand for the builders to deliver immediately. That may be the one reason that in terms of there is not much voice against the builders in the state of Kerala. Otherwise, many of the projects which are especially the plotted development projects or the building projects which are got delayed, at least half of the project which is delayed in terms of in the state of Kerala. So we as a professionals ensure this is one of the important certification, one of the important professional assignment we have it towards this industry and the act. Next, as I told you, various other forms of certificate which are notified. Form 1 would be about at the time of registration. Form is about 4 is about chartered accountant in practice who issue it. And again, form which I've told you about the annual audit, which already explained to you under section 42 LD proviso 3 to the 42 LD. Okay, and which mandates the chartered accountants to issue the audit certificate under RERA, which is very much required under the act. That is first slide I have shown it to you, that is extended up to 31st March 2022. One which we should also remember, that the chartered accountant who issue the certificate for withdrawal of money should be a different person or a different entity to issue a certificate for annual audit under RERA. So proviso 3 talks about withdrawal of money to section 42 LD. Proviso 3 talks about section 42 LD to proviso 3 talks about audit of accounts under RERA. This is one more opportunity for the chartered accountants in the area of RERA. As I mentioned, section 42 LD is very important, and this audit shall be completed within 6 months from the end of the financial year. That means to say that 31st March is the end of the financial year. 6 months is 30th September is the cutoff date to get the accounts audited under RERA. So if it is not audited, then section 61, which is already mentioned by the authority and which is a huge penalty, and that should not be the intent, or that should not promoter should not end up with landing payment of penalty. And this is also one of, when do we say that the project is completed? The project is completed once it is internal development work or external development work is completed in all aspects. The development work is defined under section 2, and also internal development work and external development works is also mentioned under section 2. The moment internal development work and external development work is completed in all aspect, then the project deemed to have completed. Once the project is completed in all aspects, a section form number 6 shall be obtained from the architect who is holding the certificate of practice, showing all the work in the projects are completed, 100% completed, and against each development work like a substructure, superstructure, walls, tiles, grills, common area, park, amenities, everything should be 100%. Then the project is called completed, and this form 6 of completion certificate or a certificate from an architect shall be uploaded on the website of the RERA authority. So then that means after once it is form 6 is filed, that means the project is completed. Then the promoter is free to withdraw the money from the project designated bank account without any limitation, without obtaining any certificate from the chartered accountants or an architect or an engineer. And please note, this is one of the important note they have given. Please do not change any professional once the information given in the application without intimating the same to the authority, which is part of your regulation. So please follow that. And if you happen to engage by any of the promoter in between, please check who was the earlier promoter or engineer, and please inform the same to the RERA authority that you have been appointed for the same. Also, they say that authority has went ahead and mentioned that in case of any erroneous certificates are issued by any of the professional, which results in some of the benefits or some of the rights are at stake, or right like allottees or end up with losing something based on the certificate of a professional, then respective professional is liable for that, and also authority refer for a disciplinary action to the respective institute. There may be architect, engineer institute. And one of the other professional opportunity for our members is quarterly updates under RERA. Friends, you all know that it is a mandatory provision under RERA. Once in 3 months, there is a quarterly updates which focus on what is the progress of the development work, what is the number of units sold, number of units booked, number of car parking books, what are the list of approvals have been obtained during this quarter, and also what is the money collected, what is the money spent, and what is the money which is laying in the 30% account. So this is a very important section 11 quarterly updates section section 11 and rule 15D is mandate the every real estate projects to submit this information. And as a chartered accountant, we are better than any other professional to provide the services to file the quarterly updates. And please ensure the data which we file under this section is matches with all other different provisions of the act, like provisions under other act, like a GST, like the PF or ESI, like a labor department. So we should ensure that the information which is giving to RERA is also consistent with, also equally correct with any other information which we submit to the RERA. Example, we mentioned that out of 100 apartments, we say that 60 has been sold as on 31st March 2022. The moment you say 60 sold, there is a possibility that you have to pay the liability on the stage wise for 60 units. And for the purpose of GST, you end up with showing only 40. For the purpose of income tax, you may say only 35. So this information available in the public domain, please ensure that these informations are matched with any other information you the promoter submit to the any of the authorities under various statutes. And this is the opportunities under RERA for the chartered accountants. Obviously, we can be a we can give the consultation advisory services to the promoters, that is nothing but the landowners or the builders or the developers. Of course, allottees, we can guide them how to buy the property by looking at RERA details. And bankers and financial institutions, we come across various financial institutions and bankers require a chartered accountant or a professionals to verify the information, verify the registration information which is filed by the promoter for obtaining the registration, whether those are in line with the provisions of the act, and is what same thing is promised to the customers or the allottees in the projects. Like the lenders also, they need the support of the professionals to advise them in terms of the release of the funds, in terms of any complaint filed, where they are making the bankers or the lenders as part of it. Even we can advise the regulators itself, because the reason is regulators also, it's a new subject for them also, and not much background, and we can be advisors to the regulators also. Of course, finally to the government itself, we can be the consultants and advisory. As I mentioned already, there is a various certifications under RERA. As a chartered accountant, I can issue audit under RERA, which is also mentioned, audit of accounts, books of accounts under RERA, proviso 3 to section 4 to LD, we can be the auditors for it. Of course, representation before the RERA authority, adjudicating officer and RERA tribunal, section 56 empowers the chartered accountants professionals to appear before the authority, AO, and the tribunal. Forensic audit is the one of the important area. Most of the states are now invoking the forensic audit of projects, financials, and what happened to the money. And after the incidents of various big builders, Unitech, Supertech, and similar builders who are all vanished because of the siphoning of the funds from the industry or the business itself, results in huge losses to the end customer, thinking there is a requirement of a forensic audit under RERA. So if that may be the one area of expertise to the professional opportunities to the chartered accountants. Suhail? Any questions from the participants, you can post it on the chat box. We can take up and we can answer, or you can open your mic. You can say that also. So before we go to the second leg of the session on post-RERA practices or change in the business, or what are the changes which are mandatorily followed and accepted by this industry and followed on day-to-day basis.
Any questions from anybody? Okay.
Yeah. Suhail, you can take
So,
up the changes, important changes. There are various other changes.
Sorry, you want to go ahead, Vinay? Go ahead.
Yeah, there are various changes. In the interest of time, we have taken very important, very important, which required for us to know as a professionals is only I'm presenting today to help.
Yes. So before coming of RERA, so we know that we did not have a regulatory mechanism. The real estate industry, the real estate sector as such, had varied practices, and in fact, a real estate project could be promoted just with a board. So now with the coming of RERA, the promoter has to now either acquire the land by purchasing it or by entering into a joint development agreement and registering it, and thereafter obtain all the sanctions, whatever is mandated under the relevant laws, under the relevant planning laws, under the relevant municipal laws, all those sanctions, permissions, NOCs. Once everything is obtained, then an application under Section 4 of the Act is to be made for grant of registration of the project, and Section 3 mandates that a prior registration has to be obtained. When we say prior registration, which means that without obtaining registration of a real estate project, no promoter should collect money, advertise the project, or do anything in respect of a real estate project which amounts to promoting the project. So what now becomes mandatory is obtaining project registration. Now, as we know in Kerala, even the fees that has to be paid for obtaining the registration of a real estate project is quite high compared to Telangana, Karnataka, and a few other states. Kerala and Tamil Nadu have one of the highest fees for because the fee that is collected is based on the land as well as the built-up area. So that being the case, the project registration is mandatory, and only after obtaining registration can a project be advertised in any manner. So when we say any manner, which means that if you're a professional, if you're advising a promoter, if a promoter comes to you saying that I've already collected money and now I have to file an application for registration, it directly amounts to violation of provisions of Section 3, and which is liable to be penalized under Section 59, which is up to 10% of the estimated cost of the project. So you should advise, as a financial professional, you should advise them that you should not collect any money before the registration is granted. It's not even that you file an application for registration and you start collecting money. It should be, the registration should have been granted by the authority. Only then can any money be collected or the advertisement can be carried out in respect of such a real estate project. So we spoke about the withdrawal on the percentage of completion of method. Any money collected from the allottees under Section 4(2) LD is mandated to be withdrawn in terms of percentage of completion with the help of the 3 professional certificates. The website updation and disclosures, as the website for each state is different. So Kerala follows the Mumbai model of the website. So it has its own the quarterly updates, which Mr. Vinay was just talking about. Those quarterly updates are mandatory. So you have to make sure that those quarterly updates are completed, and any additional disclosures that have to be made while the quarterly updates are being done. So even those has to be done. So agreement for sale, we just discussed that under Section 13, the Act mandates that up to 10% of the total sale price of either a plot, villa, or an apartment only up to 10% can be collected under an allotment letter or by way of issuing a receipt as booking amount. Thereafter, anything more, an agreement for sale in the format that is notified under the rules. In the very same format, the agreement has to be entered into. And if any additional clauses have to be added into the agreement for sale, we have to make sure that those clauses also adhere to the provisions of the Act and they're not contrary to them. An agreement for sale has to be entered into, and the RERA Act mandates that it should be registered. Though the Registration Act does not have such a requirement unless possession is delivered, but however, the RERA Act prescribes that it has to be registered, so mandatorily we have to register the agreement for sale. So project accounts and audit, we have a RERA annual audit, just like any other audit, so that which has to be filed within 6 months from the end of the financial year, which means the 30th September, the RERA audit has to be filed, and that is a mandatory requirement under Section 42 LD. Then, in case of any changes in specifications of the project or in the plans, if any modification of plan has to be undertaken, then under Section 14, it is necessary that 2/3 of the allottees have to consent to such modification. Without having obtained 2/3 consent, if any modification is carried out, it will become illegal, and the allottees may come back later on and seek for such changes to be set aside or any other seek for compensation. So if you should know that this comes under Section 14. So in terms of penalty compensation, sections 12, 14, 18, and 19, it is mandatory for everybody, every professional who advises their clients on RERA to know that these are the provisions under which compensation can be claimed by an allottee. The next is the carpet area. Carpet area is now defined under the Act, and it is mandatory that a promoter discloses the carpet area that is being conveyed. Though the super built-up area can still be shown, that is carpet area and the exclusive common area and common area. If you add all of these three together, that will sum up to the super built-up area. You can define it separately, but it is mandatory that a promoter has to disclose the carpet area to the allottees, and if there is any variation, if there is any reduction in the carpet area, then the promoter becomes liable to pay the compensation to the extent of the reduced carpet area to the allottee while at the time of handing over. So disclosure of carpet area is as important as anything else, and it is now necessary that the promoters disclose the carpet area right from the beginning, right from the time of the advertisement commences, and not just in the agreements or in the sale deed. The carpet area should be disclosed at the first instance itself. So with this, it kind of streamlines the business, and it takes away the practice of a promoter doing anything and everything. We knew for a fact that the promoters would reserve rights to modify the building plans to themselves, and many a times the specifications would change at the last moment. There was no way that the allottees could go against the promoter and say that these specifications have changed, or what specifications were given. Higher specifications were given, but what are being developed is much lower. So all these things are a change in business, and defect liability now extends up to 5 years, which is a right, or which is a protection given to allottees under Section 14. So from 5 years up from the date of possession, the defect liability has to be addressed by the promoter, that when a notice is received regarding any defect, the promoter is now required to correct that defect within 30 days, and thereafter, if any loss is accrued to the allottee by virtue of that defect not being rectified, the allottee will get a right to go seek for compensation under Section 31 of the Act by filing a complaint before the adjudicating officer. So the whole way the real estate business is done changes, and as financial or as chartered accountants, I think you play a very vital role in terms of the conceiving of a project, because the financial management of a project becomes primary now. In terms of, in fact, Kerala RERA is one of the authorities which asks for what is the source of fund for the promoter to carry on with the real estate project? So when we see, when at the beginning itself, when the authority is asking what is the source of fund for you to carry on with the project, it cannot simply be that I'm going to sell, collect money from the allottees and then build. So there has to be a definite source, and as financial professionals, you are the best to advise the promoters in terms of conceiving the project financially, to be able to see that the project gets completed within the project end date that is stipulated under section 42LC while registering the project, so that the promoters don't face the consequence of having to pay penalties and interest to the allottees. So whenever if you have clients who are promoters, you should tell them that financially first see whether the project is viable, only then take it up. If we cannot do so, it's better that they don't take up the project, because going further, we know that with these with the courts interfering, the law is only getting finer and finer by the day, and the Supreme Court has in fact has now recently held that the rights of the allottees are over and above the rights of a lender. So that much importance is being given to allottees, or it is going pro consumer to that extent. So if you financially assess that this promoter cannot carry on with the project, you should advise them not to take up the project, because the losses that they will accrue at the end of the day, if they are not able to deliver what they promised, will be much greater. They'll rather be happy with the money that they have and keep it with themselves. So as financial professionals, you play a very vital role in advising your promoter. So to do so, you should also make sure that you understand the act, the intent of the act, and what should be done, and do's and don'ts under the act, so that you are able to do that. Yes, Vinay.
Yeah. So if we compare this slide with whatever the initial objective of the act, the project registration, which is something which is a regulation mechanism and the standardization across India, the advertisement which brings transparency in the project, withdrawal of percentage of based on the percentage of completion method, which gives the accountability for the promoters to utilize this money for the project development, for them to deliver within the timelines. Website updation and disclosures brings the transparency in the doing the business. Carpet area, one is the standardization, second is the transparency, third is accountability in terms of measuring and delivering by the promoters in the project. Alteration in the project approval, 2/3 of allottees, which is also like a transparency and also standardization accountability. The promoters cannot go unilaterally and modify the building project plan without taking consent of the allottees. Project accounts and audit, which brings the transparency, which also brings the accountability, and also ensure that money which is collected for the project has been utilized in accordance with the act and the rules. Agreement for sale, again, which brings the standardization, brings the professionalism, brings the transparency, brings the across India, all India standardization of the practices. So this entire provisions of the act is in line with the primary objectives of the act, which we have seen in the first slide. That is what I would like to connect each one of these provisions to the basic objective of the act. Any questions from the participants? You can post it online, or you can raise your hands. You can also share this. You can also pose the questions to us. We can answer based on whatever the discussion we had, and also any other questions related to the real estate and RERA, you can certainly post to us. So,
I have a doubt.
Joe, sir?
Yeah, I have
Yes,
a.
sir.
This is regarding sale, not building, sale of land. If we, 1 hectare or 100 cents of land, and we are selling piece, whether RERA is applicable.
Yes, sir. Sale of flat.
Not flat.
Of a plot.
Plot, yeah, exactly.
Flat site. Yes, sir. If you read the definition of a real estate project is something which building is constructed or development of a layout or a plotted development comes under the definition of a real estate project which require a registration under RERA, sir. So plotted development is a compulsory.
Yeah, suppose I have 100 cents of land. I'm not selling the entire thing. I'm selling 10 cents of land, suppose. Then in that case, whether it's required.
Section 3 mandates either you are selling all or even selling one in the project, then it requires a registration under RERA, sir.
So the project means we have to do some common pathway. Yeah. Yes, Shuven?
Just to give you an example, let's say you're a joint family of 10 members.
No, not joint family.
No, I'm just giving you an example. I'm giving an example. So,
okay.
so you have some amount of land where you want to carve out about 12 plots out of that. So, of the 12, 10 you are keeping within the family, and only 2 you want to sell outside.
Yes.
To maybe your immediate family members. Maybe you will sell to your cousins or your uncles. Even then, that project will have to be registered, because 2 of the plots, though you're retaining 10, just 2 you're selling, and it is more than 5,000 square feet or 5,389 or 500 square meters, it becomes mandatorily registerable, and you have to register under the provisions of the Act. So even in such cases, if the same thing even if applied to apartments, let's say 10 apartments are being constructed, 9 are being retained by the family, only 1 is being sold. Even then it has to be registered. So that's how the requirement of the Act is.
Yeah, as per the section, it says the development of plot. So if I don't do any development as such, say I have a roadside, on the 4 sides I have a road. And if I'm selling one corner of 10 cents out of 50 cents, whether it will, whether it's because I'm not developing anything there. I'm just make it, cut into small pieces of 10 cents and I'm selling it. Whether that, because the section says development of plot, right? So whether that will amount to development of plot. That is my question. That's my doubt.
Sir, recently, Joe, sir, there is I remember one notification which is issued by the RERA authority in case of selling of some of the piece of land out of the larger piece, also attract RERA registration. I remember he has pronounced in one of the meeting. It is not a public notice. It is, he has announced this in the public meeting, where they have come to know that a few people are taking a larger piece of land and cutting into smaller pieces and selling it off without RERA registration. I remember reading somewhere in the newspaper or news article on this, but it has to, at this point of time, technically to say that it should satisfy the definition of a real estate project under section 2ZN. If it is satisfy a definition of a section 2ZN, then it is mandatory to register under RERA, unless there is specific instruction, specific guidance from the RERA authority to register any other transaction or any other way of project which is other than to qualify as a real estate project. A simple example, in few states we have concept of selling the farm houses, farm land, agricultural land. Like we have a concept of selling 10 cents of agriculture land. Even selling of agriculture land of 10 cents doesn't comes under RERA. Agricultural land. Okay, so similarly we have to see the exact case. It is only selling only a piece of land, generally doesn't require a RERA registration. However, if it is falls in the definition of a real estate project, it requires a RERA registration, sir.
Okay, sir. Thank you.
Yeah, thank you. And as we mentioned that post RERA, there is a change in the customer transaction also, the way that we carry out the customer transaction. And if you see, there is something which require for us to follow the procedure and process which is laid down under RERA. There should be a booking form, there should be an allotment letter, there should be an agreement of sale, and that agreement of sale requires a registration for the promoters to collect more than 10% of the cost of the unit. Section 13 of the Act mandates if the builder or a promoter wants to collect more than 10% of the unit cost, that agreement required to be registered. Without registration, they cannot collect more than 10%. Then formation of the allottees association is a must and mandatory. Obtain the completion certificate or a occupancy certificate and only sell or register the sale deed after obtaining the occupancy certificate. And title insurance is a must. Defect liability for 5 years, and after that there is a proper handover to the association. So entire the transaction with the customers is brought in under this act, and if you connect those things, this is how it looks at, and this is one of the intention objective of the RERA to make it transparent, make promoters accountable, allottees accountable to participate in formation of the association and come forward to take over the project by themselves after completion of the project. We always listen from the builders or the developers. Customers are not coming forward to register the sale deed. They are there in the abroad. They say that anyhow we have completed, we also made a payment. Please retain with you, we'll come and register whenever we want. It is not permitted. So there is a mandatory provision under section 19 where allottees are mandatorily to come forward to take a registration within 2 months from date of receipt of occupancy certificate. So similarly, the promoter should also to come forward and register the sale deed within 3 months from date of occupancy certificate. And this is how the post-RERA practices which made the industry, which made the transaction, which is of a professionalism, standardization, transparency in order to achieve the objective of the act. Then with this, what will happen to this industry? How this, what it takes for this industry to accept, and also there is a changes in terms of way of they doing the business, and finally there is a transformation in the entire aspect of it. So this slides looks how it how the transformation in the business itself. Start with there is a impact on the business model itself. We all know that there are earlier pre-RERA, there were no regulator, and there used to be a loosely structured, and there would be a structure such a way that where somebody else are the owner, somebody else are doing the business. That is not permitted. If at all permitted now, how do I structure it? There is a proper structure to carry out the business that is mandated. The moment it is structured properly, there is a requirement for the promoters to look at the cash flow planning, project development. Under RERA, as I mentioned, 4.2 LC mandates the end date of the project and also start date of the project. I should give it. Once I have the start date and the end date, I have to really plan what work should be done at what periodical time and what would be my cash flow impact and how do I source these funds, how do I raise these funds. Project development and cash flow planning is a must. It is not that earlier we used to calculate for a construction of an apartment per square feet is 1200. I have 1 lakh square feet. So my project cost is 12 crore rupees. That is not the way to look at that. Now the 12 crore rupees may be a cost of the project. Where is other cost which is involved like a approval cost, RERA cost, compliance cost. In case of a delay, what would be the compensation? In case there is no sales, where is the interest cost? All the cost has to be culminated and arrived at before we put these numbers into the RERA website. Superior project management, I'm sure that once we have this project development or progress development, which is mandated under RERA, cash flow management, there is a better and superior project management where I can check every quarter as a promoter. I have to report what is done. That gives an indication, that gives the benchmark, that gives the progress of the development of the project by the promoter from quarter to quarter. Customers can log in and see that what is the development of the project from last quarter to this quarter. If there is no progress in the development, customer can come back and say that, ask that why is not progress, there is no progress, and if there is no progress, I will not make payment. Even the bankers or lenders may not make the payment towards the installments or towards the construction finance. So these are all leads to bring some standardization, brings professionalism, brings accountability in the industry itself. As we mentioned, it requires a cohesive approach across all departments. Like sales cannot say that I sold 20 units, where accounts people say we should only 10 units, 10 apartment pricing, because how to collect information, feed into the RERA website, and this RERA website is something which is a transparent. Anybody can log in and see that what is the number of units sold, what is the number of units available, and how much is completed now. Now you cannot go back, sales people say 20 sold, finance people say 10, and your marketing people say all sold out. Management is not aware where is the money for me, and bankers should not look into that. Okay, you are given the inventory of unsold unit, and where you are on the RERA website you say that sold so many. So all these departments should collectively work towards to provide the information in a uniform way, provide the information in a cohesive way, and all this information should match. Otherwise, the promoter would be in trouble in terms of reconciliation and giving the report to various statutory agencies. Increase in sales efficiency, the moment you bring the discipline in construction, discipline in finance, discipline in providing the information, discipline in sharing the information to RERA, communication to the allottees, there would be increase in the sales efficiency. Sales people can confidently talk that this is what is RERA project is about. You can log in and check what is the performance of this project. And the design of management design is something at the superior level. So overall, this brings something of awareness, get ready, change and readiness in terms of what is happening. And of course, as we mentioned, this is utmost discipline, this should be there. And finally, there is a monitoring mechanism. This is a 4 pillars under RERA, where you have to be aware of it's what happening and what have to ready to change and accept this readiness, bring the discipline, make practice of it, and having practice, please monitor what's happening and that. This is something which is a transformation in the real estate industry. Friends, I and you as a chartered accountant know how this industry operates, what is the challenges in this industry, and what are the opportunities in this industry. And if it is not controlled, if it is not regulated, it's difficult for anybody to achieve its objective. Friends, in spite of so much, this industry not got the status of a industry status itself from the central government. Still finding difficulty to invite, attract the FDI, finding difficult to get a bank loan at the lesser price compared to any other industry. Always it is rated as a high risk industry. Always say that there is a suspicion in any of the transaction. Most of the department looks at this is the industry has a rich cash profit, and how do I squeeze it? How do I make use of the opportunities? All these things are of the past. So look at what can be bring into the table to make this as the industry itself in compare and in compete with any other industry, and look at the transformation that is possible in this. Suhail, you want to add something?
No, I think you've pretty much covered it all. And as professionals, if you do take up RERA practice, even if it is just issuance of the certificates, I would urge you to understand the Act at least from sections 2 to 19, because that will give you an idea as to some idea into what a real estate project means, how are some things. So you should know something about the Act for you to be able to even issue just a basic certificate, because in relation to that, as we go further, if a project gets complicated, then you will understand what you have done, why you have done, and what could be the questions that could be asked at a later point of time. And always make sure done properly, in the sense that without proper data or without proper information, no certificate is issued. so that as professionals, you take care of your professional duty of issuing the proper certificates. And it is an upcoming field, and it is certainly promising in terms of practice. It's not just when we say CA certificate, it's not just a certificate. The practice could enlarge itself to many other things. So it's a good field to be in, and going further, it is only going to get that much more finer and finer, which means that the advice that as a financial professional who understands the act that you can give will be that much more better and that much more sought after. So it's a good place to be in, and if you start early, I'm sure that once you learn, it'll also give you the name, fame, and money. So I think it's yeah, that's it. So thank you for giving us this opportunity, and I would have loved it if it was a little more interactive and we had some questions. Perhaps we could take some questions towards the end of it.
Yeah, participants, if anyone have any questions, you can either switch on your mic and ask, or you can post in the chat box. And you can note down the number and email ID of our faculty. Both of them, they have given their contact details. Yeah, Vinay mobile number is available here. You can note down. Vinay, can you share this PPT so that you can give to our members, and also you can just type your mobile number in the chat box to everyone.
I will do that, sir. I will do that.
Yeah. Okay.
Yeah, I have posted my mobile number and the email ID. If there's anything, you can reach out to me.
I think there is no questions.
No questions. Okay. And Salim,
which means either our session was very good or nobody understood anything.
No. It was very informative and what we call practical session. I think everyone understood.
Yes.
Salim sir and Joe sir, this is the newspaper which I was mentioning. That I think you can read this where authority has mentioned.
Yes, so, but my question was whether if there is nothing, no development is happening, whether because the definition says development of clouds. So I'm saying
Yes,
I'm not developing anything. But that was my question, concern.
True.
Okay.
So this is, of course, it is a very tricky one. It doesn't satisfy the definition of a real estate project. One need not to register under this.
Yeah. Okay, sir.
Yeah.
Yeah, it's very informative. And regarding JDA, that stamp paper I have mentioned in the chat box, the value, you asked the value of JDA. In Kerala, there are, it is a slab rate. JDA, if does not exceed 10 crore, it's 2 per 100 rupees. Maximum is 25,000. But if it is between 10 crore and 50 crore, 2 rupees, again 2 rupees for 100, but maximum 50,000. And if it exceeds 50 crore, then it is 1 rupee for every 100, maximum of 1 lakh rupee. That is the registration fee now from 2020.
Very small, sir. Very small.
Very small. Very small. Yes.
But still, we reason from the various promoters, they don't register the JD. We do not know, because without registering JD, it's very difficult to protect themselves from the land owners. What is the hold they have on the landowners without registering the JD? Okay, we as a professional, we should strongly advise to protect both of them to follow what is really required. We should protect both of them. We should encourage them to register the JD, sir.
Okay. Yes, that is correct, sir. Yes, Salim, our Sumit also has joined from Gurgaon. Welcome, CA Sumit. Is from Tax Online.
Thank you very much, sir.
Yeah. So Vinay, can you wait for 2-3 minutes? I mean, maybe 5-10 minutes.
Yes, sir. Sure, sir. We are here. We
Okay.
are there,
Okay,
sir. Yes,
Sumit,
sir.
you can please go forward.
Can I get the option of sharing my presentation or my?
Yes, definitely. Yes. 1 minute. Shinu, can you?
Done, sir, done.
Done. Yes.
So my screen is visible to everyone.
Yes, it's visible, Sumit.
So thank you very much, sir, for just giving me this opportunity to interact with the members. So this is what actually, let me just introduce myself. Myself, CA Sumit Mishra, and I'm working for this Texo. I've developed this entire GST solution, knowledge solution for all the members and everyone who is taking care of this GST regime. So without taking much time, I'm just logging directly to my portal. So this is the interface we have, texo.online. So here is the home page where you can log in, like by putting your login credentials here. So this is the dashboard wherein we have just developed a book, online book. Instead of this printed publications, now we have developed an online solution just to cater the problems all the practitioners are facing, like number of frequent changes we can observe day by day in the GST. So we all are facing problem just to get updated from all the changes coming day by day. So whenever we face problem, what we do, we usually go to the Google and just search out the content. Now the apprehensions came out, like whether the content you are checking on the Google is up to the mark, is authentic or not. So just to understanding all the scenarios, all the problems of the practitioners, we have just developed this solution to make everyone updated with the GST amendment, GST developments. So here is the home page. Here you can see latest news. We have just created a page for latest news every day, whatever the latest as well as relevant news you will get over your mobile, over your email. If you are registered, you will get everything on the mobile number, on your mobile number, WhatsApp number, as well as on your registered mail ID. Here are the articles we have just posted. So recent articles on the recent issues, hot issues, contemporary issues, everything you will get right here in the form of articles. Here are the important links. So generally for just going checking out any challan, checking out any status of your refund application, what you generally do, you log into a portal and then after you can check it. Now here what we have done, just to create an ease, just to save your time, we have just mentioned all the links, relevant links, like you can check out here if you want to search out any GST numbers. Similarly, you want to check out with the PAN number, then you can click here, you can search out with the by directly putting the PAN number. So this is basically the home page of this entire book. So now I'm just logging into my book. This is the account, my account. Here we have provided all the quick links. By just clicking on this, you will get the overview of this book. This is the book. Actually, this is the book. So let me just explain you the functionality. So here we have put in all the chapters of GST, like 21 chapters, all the sections 142 to 174. Similarly, we have mentioned over here rules, case scenarios, notifications, IGST Act, IGST rules, SGST Act, and case studies, contemporary issues. So one by one I will explain without taking much time. So what we have done, just to create an ease to all the members who are just searching out the content over the Google, what we have done, like for example, I'm just taking an example of input tax, the most used sections of this GST regime. Like we have segregated all the sections separately. And what we have done, just to create an ease, we have segregated into 6 different parts, like section relevant tool. Here you will get the BEAR Act. Analytical review. Analytical review is the commentary prepared by us, our entire team of experts, wherein you will get the entire analytical review of section 16 only. Similarly, whatever the case law we have seen since the inception of GST pertaining to section 16. You will get the compilation over in section 16 only. Similarly, FAQs issued by the CBIC or something which we have received from number of folks, so we have incorporated over here. Similarly, case scenarios. The case scenario is basically a type of illustrations which we have developed in-house just to make everyone understand what is exactly the section 16. Similarly, relevant notification and circulars. So you will get the all the notifications issued by CBIC till now since the inception of GST pertaining to section 16. You will get right here only. So I'm just explaining one by one. Section 16. This is the entire BEAR Act. So what we have done, like BEAR Act is here, section 16. Similarly, a series of amendments you will find here in the references column. So whatever the changes made by the government since the inception of GST, you will find here the references by which notification the amendment was came. Similarly, everything is here. We have colored the different pointers, like whatever we have mentioned in the form of green color is a content which was introduced in the section 16 after the inception of GST. It was not present in the original act. Similarly, in the brown color, we have colored this like it was at the time of inception of GST, but some changes were brought during the period since inception to till date. Similarly, the pink color is we have done. This is just a temporary color. This is the change brought by this Finance Act 2022. So now it has been introduced. Assent has been given by the president. So it will again we will color it in the form of green color. So this is the segregation we have done so far in this book. And the important thing which can save a lot of time is the as may be prescribed. Whenever we read a sections, what we see, like there is a mention like as may be prescribed. So we rarely get this thing that which relevant rule you need to refer. So what we have done to create an ease, we have created a link, rules 36. So whenever click on this rules 36, you will directly jump to the rules 36. So you can get the glimpse of entire rule 36 right here without switching to any other page. So entire series of amendments in rules 36 also present in the reference for amendments. So this is the entire act and rules references. Similarly, section 60. Similarly, analytical review. What I told you, analytical review. In this analytical review, what you will get the entire synopsis. Basically, what we have understood with section 16 in the simplest form with the help of examples, flowcharts, and graphics. We have just tried to make you understand that what is exactly section 16. So here are you can see the entire documentary in number of pages. So if you want to understand in detail about the section 16 apart from the BEAR Act content, so you can go there and you can understand what is section 16. Similarly, coming to case laws, case laws. So these are the relevant case laws. If you can see here, so number of case laws we have seen so far in related to section 16. So we have mentioned with the limited content we have placed all the sections, all the case laws over here. So if you want to take a glimpse of all these case laws, you can check it right here. So you can use whenever you face any assessment kind of proceedings, you can take a reference from here. Similarly, FAQs related to section 16, you will write here issued by the CBIC. You will get the glimpse of all these FAQs, like 20, 30, 21 number of FAQs you will find here, just to get the clarity what the department is saying about the particular situation. Similarly, case scenarios. Case scenarios basically we have created all these case scenarios with the help of our internal team. So what is the use of these case scenarios? You can understand with the help of examples, like a reference, a ready reckoner. So anyone in your office, like if somebody is coming to your, like an article or somebody else who is getting a lesser knowledge of this GST, so he or she can understand with the help of these illustrations by applying all these numerics. Similarly, coming to the next point, relevant notifications. So we have placed over here all the notifications related to section 16 only. So without going to Google, without going to any other site, you can get the authentic data right over here. Now coming to case scenarios, we have created another type of case scenarios. You can directly reach to the case scenarios by putting by clicking on this case scenario tab. Similarly, now coming to the notification and circulars. So we get the compilation of all the notifications issued by CBIC since the inception of GST. So we have applied so many filters over here, like from the date, you can search it out by putting the date, range. Similarly, if you want to search out notification related to CT, CTR, IT or ITR, circular, guidelines, anything. If you want to search out, you can just click on the CT rate. So all the notification related to CTR you will find here, right here. Similarly, we have provided another filter here. Like if you want to search out like notification, you want to search out notification related to exemptions. You just mention an exemption, just click on the search folder. So all these notifications filtered by this functionality, you will get some exemptions. Some exemption is provided by the government in these notifications. So all the notification related to exemptions. Similarly, e-invoicing. If you want to search out e-invoicing notification, you will find out all the notification wherein there is a discussion about the e-invoicing. Similarly, coming to HSN. So all these functionality you can search out, just creating a environment of an ease to all the practitioners. Similarly, if you remember the number of notifications, just mention the notification number 11/2017 related to notification for rates under GST. So you will find it. So we have provided here updated notification till 12/1/2022 and original notification issued by the CBIC. So just if you click on this, you will get the PDF. Right now we have the functionality of getting this rates in PDF, and thus in the days to come, within a span of 1 month, we will switch it to the HTML format so that you can search anything over there. Apart from that, I think one more thing is there, like case studies. So like all we are practitioners, so sometimes we don't have idea about a particular sector. Like somebody is dealing in the banking sector, somebody is dealing in e-commerce sector, somebody dealing in freight sector or education sector. So if some client is coming to you and wanted to, he's dealing in like e-commerce industry, and if you don't have a glimpse, so you can take idea of e-commerce industry, what kind of transactions you will find in the e-commerce industry. So we have number of clients related to each and every sector. So based on the practical experience, we have compiled the entire information, what the maximum transaction you can find in a particular sector. So we have compiled each and everything over here in the form of examples. So you can find, I believe this is the most one of the valuable stuff we have put in just to cater our fraternity members. Similarly, there is a contemporary issues. We are just putting over here the contemporary issues like an amount paid under protest reference from. These are the issues which are not clear till date. Like somebody is facing difficulty, department is not clear, as well as a taxpayer is not clear about the particular fact to reference from it. It is one of the most litigative issue of the GST as well as service tax regime. So similarly, we are putting all the contemporary issues over here just to share the GST knowledge to all the fraternity members. So this is what we have within this book. Apart from this, we are providing this OmniWet magazine. You can find number of articles published. Sorry, just a minute. You will find this OmniWet magazine. This is the global wet magazine. We are just publishing it bi-monthly, twice, once in 2 months. 6 editions in a year. So these are the only articles published by different business tycoons. Like I'm telling you, you can get Singapore wet article. So over, if you want a glimpse of GST in Singapore, what is exactly happening in GST in Singapore, so you can take a glimpse from this, written by Chief Executive Officer at Devon Capital PT Limit, Singapore. So from experts or CEOs level persons of different companies, they are just putting all the articles in this OmniWet magazine. So you will get the glimpse of all these things in this magazine. So just to share with you, we are just providing this entire solution to all our participants, just a complimentary kit we will provide you. Just Just thanks to Mr. Jose, who has just allowed us to just share, to interact with all the participants, just to give this complimentary to all the participants. This is all from my side. Thank you, sir. So any questions? I'm just one more thing. I am just telling you how you have to subscribe this. You just go to this shop, just text for GST 1 year 1990, add to cart. Again, add to cart. So just a minute. So add to cart. So we will provide you a coupon code. You have to put in this coupon code in this field. The moment you applied this coupon code, this amount will come 0. So just proceed to checkout, and now you after that you can just explore this entire book.
Okay, Sumit. Thank you very much, Sumit. We can share the coupon code with ICAI Ernakulam email ID. We can share it to our participants. Thank you, Sumit. Thank you very much.
Thank you, sir. Sir,
yes.
One more thing, sir. Should I share this coupon code to you, or I can get the details so that I can share directly? I can.
Yeah, we can. We will share you the email ID of all the participants who are joined today. So you can give directly to them, no problem.
Yes, yes. So that if the people face any problem, so that my team.
Yeah,
my team can help them out.
Each coupon will be different, no? It will be unique coupon number.
Yes.
Yeah, so we will send you the list of participants with email ID. Yeah, okay.
Okay, sir. Okay, sir.
Thank you, Sumit.
Thank you very much, sir. Thank you.
Thank you. And Salim, over to Salim.
Hi. Thank you so much for the informative session today on RERA by both our speaker. We cannot say any especially because both are very talented in the RERA sessions. They are very expert in the RERA provisions, and even though they are both are given the session together, there is no overlapping of the session. That was a wonderful and informative session by both of CA Vinay Tyagarajan and Advocate Suhail Ahmad on the objective of RERA, importance of JDA, and importance of chartered accounts in the RERA, and also the changes in RERA promoters' duties and registration details. It was a very informative session by both of the speakers. I thank both the speaker, our member Suhail, our member Vinay, and Advocate Suhail for the informative session. And I also thank the CA Sumit Misra introducing the taxo about the GST site. And I also thank my colleagues in the profession and senior members, those who are attended today's sessions. Thank you so much. And thank you so much for the management committee, those who are attended today. Thank you.
Thank you, sir.
Thank you so much.
Thank you, Jose sir. Thank you, Salim sir. Thank you everybody for the participation. Looking forward to meet you in person in Ernakulam, sir. Thank you.
Yes, sure. We need more session like this.
Yeah, Vinay sir, we may have some physical session on RERA later. Maybe we can work out that also.
Sure, sir.
Thank you. Thank you.
Okay, thank you so much.